Hi dear traders. Last week traders were focused on US labor market conditions. There are some doubts about US employment. While the ADP report unveiled a surge, the official data from the US Labor Department showed a slower rise of 187,000 in the number of employed people. Notably, their growth is not only below the forecast but also below the level of needed for successful economic development. To reach the goal, the number of employed people should increase by 220,000–250,000 every month. In this light, investors prefer not to buy the US dollar. Nevertheless, the US dollar closed the previous week with a rise of 0.37%. Thanks to other macroeconomic reports which are still reflecting the strength of the country's economy. In addition, demand for US bonds remains relatively high, despite the fact that Fitch downgraded the US credit rating for the first time in 30 years. In other words, foreign investors continue to buy US debt bonds. The euro-dollar pair managed to recoup its losses amid news about the US labor market. The pair closed the week near the key level of 1.10. Curiously, during the week, the euro slumped because of the business activity data, which disclosed a deeper decline in the manufacturing sector and slower growth in the services sector. This points to the still existing threat of a recession. Meanwhile, the pound sterling reached a monthly low against the greenback. On Thursday, the Bank of England held a meeting at which it raised the key rate by 25 basis points. However, traders were more focused on further changes in monetary policy than on a rise in the benchmark rate itself. Thus, traders defined the central bank's rhetoric as dovish. What's more, investors supposed that the Bank of England might have hiked the key rate by 50 basis points once again amid the recent macroeconomic figures, particularly the inflation ones. At present, traders are still assessing the actions of the Bank of Japan. At the recent meeting, the regulator decided to loosen control over interest rates and allowed the 10-year bond yield to climb above the upper limit of 0.5%. Such a situation was last seen 10 years ago. The regulator's decision came as a real surprise. The fact is that Bank of Japan was the largest central bank that remained dovish. It dared to change its policy in the face of stable high inflation and permanent pressure on the Japanese bond yield and currency from constantly rising key rates. Under these conditions, the yen made an attempt to rise and closed the previous week slightly below the level of 102 against the US dollar. Gold prices are still hovering amid the ongoing discussions of possible changes in the key rate by the Fed. Judging by a drop in gold prices, investors are sure that the benchmark rate will be raised higher. Notably, the US Labor Department report issued on Friday might have shaped the Fed's plans. Thus, the market sentiment has slightly changed. A record slump in US oil reserves was one more shocking factor. In case of restrictions on oil supplies to the United States, the country will run out of oil in just 10 days. Traders also took into account the reduction in oil output by Saudi Arabia and Russia. Against this backdrop, buy positions on oil surged. As a result, the price of Brent crude climbed to $86 per barrel. However, the growth in oil prices is capped by a sluggish economic recovery in China, which is the world's largest importer of oil. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!